The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. If you miss an episode, you can catch me on Spotify or on Apple for past recordings, or visit me at themainstreetcode.com, and I have YouTube audios of all my radio shows, and try and keep you up to date the issues. It's been quite a year. A lot of good things happened this year, and a lot of activity, a lot of things happening in the insurance market. When we talk about our code, we talk about choice, organization, direction, and education, and we help hundreds of people throughout the year, as well as accountants, attorneys, and other insurance professionals. We are completely independent. We are not only help you, but we are a wholesaler for many different insurance companies. We're completely company agnostic. And as a matter of fact, we were hired this year to be an expert witness on insurance with a law firm. And I've also had some law firms reach out to me because I am an advocate for you, the consumer, when it comes to insurance. And recently, an attorney reached out to me. It's not the first time, because this young gentleman's father had died 4 years ago, and the insurance company refused to pay the death claim. And he was 18. His father died of a brain aneurysm, and for 4 years, they haven't paid a claim. And so they said, Neil, can you help? This was in November. Earlier this week, I gave him a check for that insurance policy plus interest, way over and above, and I'm happy to have done it. And looking back on it, I have a lot of comments as to why they didn't pay the claim. First off, the insurance policy was sold by a company. You know, I always go back to, when I look at an insurance policy, I go, who was the agent on the policy? Nobody knows who the agent was. So the guy must have bought it online. I looked at who was the company. The company was a company that you could only purchase online. There was no medical or no blood taken or anything else, and it was an easy issue product. And apparently the gentleman had died of a brain aneurysm 6 months after he bought the policy. So what had happened the last 4 years is they're trying to go back on doctor's records to see if the guy knew he had a brain aneurysm. How do you know if you have a brain aneurysm? It's absolutely ridiculous. But where was that advocate? Where was that insurance agent helping them get that claim? Obviously, there was none. Okay? So they bought it off the internet, whatever they did, from a company that's no longer issuing policies. I happen to know who the company was. And within weeks, I was able to get that claim. He was able to get paid. Now, I feel bad in a sense because I know that policy was to help him pay for college. So I know most of that money is probably going to get sucked up from college debt he built up the last 4 years, because he's now 22 years old. Very thankful. I'm so happy I got it to him before Christmas and Hanukkah and the holidays. It should have never come to that. But if you have a problem where you're being denied a claim from an insurance company, I'm not an attorney, but reach out to me. I speak insurance. And the attorneys reach out to me because they know it would have cost, through attorney bills, thousands more dollars, and they may have not gotten the result. They don't know the insides of insurance companies. That's what I do. So it's not the main part of my occupation, but it is something that I'm known for, helping people out when they run into issues. And there's a whole nother area of expertise that my firm has that I talked about on other shows, and I'm going to tell you why you'd like to use me and my firm for any of your life insurance, disability, long-term care purchases. We're working with another situation where a client was declined from 2 different carriers, a very, very big contract, and he was declined. And then in our conversation with the head underwriter of the firm, we found out that there's a medical report out there. Actually, I've got several of these that stated in 2010. So the insurance companies have a couple different reporting methods, all done via computer now, that they never had in the past. So, for instance, if you take a prescription drug and you take a drug, let's say you take eye drops. We had a situation this week. A woman was taking eye drops because she had styes in her eye, and they said, well, she has macular degeneration because that's what the medication is for. No, that's not. So, but you, as most insurance people, won't even know that. They don't go deep into saying, well, why did she not get disability coverage? Because she's going to lose her eyesight. Because she has macular degeneration? No, she doesn't have macular. Well, what's this medicine for? So they can find out any medicines you took, or you say, I didn't take any medicines, this and that, and they were prescribed to you. They assume the worst if you don't tell them what's going on. So they'll find stuff out. So they have different reporting systems. Anytime you apply for life insurance, it's reported to what they call the Medical Information Bureau that insurance companies use. It's a whole nother process they look through. So if a company says, I'm declining you for a specific reason, then the next company that looks at you may decline you because they see that this other company declined you because that company reported you had cancer or you had this and you didn't disclose that. And this is what happened in this case I'm working on now. I have had 2 companies now that have declined this person because of a 2020 report that a company said he had cancer when I have all his medical records and I know he doesn't have cancer. So I have to reverse engineer it. Now, most companies and most agents are going to walk away from this case. I will not walk away from anybody if I can find reason that's something that I can do something for somebody. So in this case, a company reported something that was not true. So we're going back to find where they got that information to code this the way they did, because right now he's not getting insurance anywhere until I unravel this, which I will do, and then get him the coverage that he wants. So that's the difference. The difference in working with my firm is getting the case done, getting the situation done. If you've been declined by an insurance company for life insurance, for disability, for long-term care, we're solution providers. Bring it to us. Let's see why. Let's get into the weeds. I don't care if you're an insurance agent and you work with XYZ company. And many insurance agents come to us after they've run into a failure. Many insurance agents walk away and leave you, the person buying the insurance, thinking, oh, I can't get it. Well, because they're not going the extra mile, because they don't know how, to be honest with you. Many of them don't know how, and many of them don't understand the intricacies of what it takes to get a case across the finish line. As a wholesaler, that's the biggest part of our job, is making sure we get you the right policy with the right company with exactly the right things that you're looking for. details are very important when getting insurance. Every insurance company has different little details, and every underwriter, which we have access to, may have an opinion or may look at a medical one way, where our underwriters may look at it differently. And we have an underwriter on staff that actually looks through cases. When you submit them to us, whether you're directly or indirectly come through us, we take the time to go through the details to make sure you get the very best offer, which the better offer you get, the lower the price of the product, or maybe you get approved where in the past you were declined. And that's what we do every day. You're listening to the Main Street Code for Financial Success. I'm Neil Himmelstein. Give me a call, 631-647-4694. If you have any questions or you have any issues with your insurance policies or you're looking for new insurance, give us a call, 631-647-4694. We'll be right back after the break. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and before the break, we were talking about people that were having trouble getting insurance or declined for insurance, or agents who can't place the kind of coverage you'd like to. One of the things we do is we work with people that, listen, we all have health issues or perceived health issues. I can give you a million situations where they've gone somewhere else and come to us and we've gotten them, you know, the best price, the best product, the best thing that you could possibly get, because that's what we do. And we do it every day. I have an attorney friend of mine who, quite frankly, an insurance company is going to charge him like $700 a month for, you know, a couple $1 million a term. And the first time I met him, I said, why? And he said, well, you know, they originally quoted me like $300 a month. And they said I had an issue with my heart. And I said, do you go to a cardiologist? Yes. And I got a letter from the cardiologist. And I got him $250 a month for the rest, you know, for 20 years. So much cheaper than anybody else. Only because I went that extra mile for him. And he's always thankful. And he always sends me different clients because of that. Because he knows I know how to get the job done. I got it done within 2 weeks. It wasn't a hard lift for me. It was just something I know how to do. It's just, that's what we do. You know, another thing came up this week, too, that I was talking to several agents. I was in a room, and I couldn't believe the idea that they don't understand. I'm switching topics now. I'm talking about annuities. You know, in some annuities, some people are buying these annuities, mostly variable annuities, but they have them on index annuities also with an income rider. So they think that, okay, in the next 5 years or 10 years, I'm going to turn on this rider that's going to guarantee me, no matter what the market does, 6% of this value or 5% or 4% of this value, that I'm guaranteed this income flow in the future. And if the market does well, I'll do a little better. If the market does poorly, but they don't understand that income rider and the taxation of it. And I'm dumbfounded because people just talk about numbers and they don't talk about the taxation of it. If you buy an immediate annuity, which is like an income stream for life, it is tax favored. And the older you are, the less tax you have to pay on it. If you buy one of these variable annuities or index riders, and we're talking money that's not in IRAs or 401ks, you can buy these with qualified money. Different story. Taxation's always taxable there. So that's a different animal. But if you buy an immediate annuity, people don't understand the power of how little tax you pay on that income. But if you buy one of these income riders, you pay tax on any growth immediately. So you're paying all your interest is fully taxable. Until you get down to your principal, it's 100% taxable. Now, if you're buying an immediate annuity, it's only partly taxable. And the older you are, the less tax it is because more of it actuarially is principal. There's some very technical terms. I don't want to get into technical terms, but basically, actuarially, there's government tables that say, okay, if you're 70 or 80 and you're buying an income for life, we're only going to tax you on the rest of your lifespan just on what the projected growth is over the span of that annuity that you're taking. So a lot of that money comes back to you tax-free. Now, why does this make a difference between how much taxes you pay? Well, actually, the more taxes you pay, the less money's in your pocket. But there's also some very other things that taxation is very important when we're talking about tax mitigation strategies. When you're in retirement, and I just got my Medicare bill, so it's fresh in my mind, how you take your income and what you're taking in taxable income versus not taxable income affects how much you pay on your Part B and Part D premiums to the government. People don't talk about it. It's called IRMA. It's rarely discussed until you get your Social Security statement that says, okay, here's how much we're going to take out of your Medicare Part B that you got to pay in. Now, basically, I think the basic cost is like $170, but if you're earned much more money or much more taxable money, then it can go up to another $400 and some dollars a month or $500 a month, substantially. So how you take your money in retirement is just as important as how much money you have. Does that make sense? So it's great if you saved, and I'll just give you another example. It's great if you saved $1 million inside your retirement vehicle, and many people have. And many people, that's their only savings. But every penny you touch out of that 401k is 100% taxable to you and 100% considered income, which could raise that price of Social Security. Medicare Part B and Part D can raise that premium every month. So the net of that $1 million is depreciated not only by the taxes you're taking out, because every dollar you touch from that retirement vehicle once you retire is taxable. In addition, you may pay more for your Medicare Part B and Part D, which you've paid into forever, but they're going to say you got to pay a lot more because of the income you're taking out. Now, these are considerations on why we do Social Security planning and income planning. It's so important when you reach retirement. I had one of the listeners call me and visited me a few weeks back, and hope you're still listening, and it's all good, and we're doing some planning with him. But at the end of the day, he's retiring, and he's looking to move. He's looking to move out of the state. And all his savings are in his IRA, 401ks, IRAs. He has some small pensions, but all his savings are there. And he's looking to sell his house on Long Island and buy another house somewhere else. Now, he has a mortgage on his house. And, I don't think in retirement, all of a sudden, he's not going to have the same income coming in. He's got some small pensions, but he's going to need an income. Now, he saved $1 million in his retirement account and thinks that's where his income's going to be. He's also probably going to have a mortgage. Now, him and his wife are over 65, and they're going to have a mortgage. Now, there's nothing wrong with having a mortgage, but if you say, oh, gee, I don't want a mortgage, well, where are you going to get the money from? Well, I'm going to take it out of retirement. Well, nah, you can't do that, because all of a sudden you're going to add, if you're going to make up a $200,000 mortgage and try and take it out of your retirement right away, you're not only going to pay complete tax on that $200,000, but you're also going to get penalized on your Medicare Part B, significantly. So that $200,000 you've taken out may cost you, 40%. That's a lot out of the $200,000. That's a lot of money that you're going to have to pay in taxes, between state and federal taxes, and pay more for your Medicare Part A and Part B because you've taken it out as income. So you have to be very strategic. And there's a lot of strategies on how to develop that income to create that income stream when you retire and live the kind of lifestyle you'd like to live, where you'd like to live. These are all very important. You need to discuss with us, and you need to have the right insurance in place and or annuities in place to make sure that you don't get the tax whack so that you have money forever. There's also other strategies that, other listeners talk about in buying that second house and how to do it tax efficiently. You've been listening to the Main Street Code for Financial Success. We could talk about this for hours, but unfortunately I have to go. And it's been a pleasure having you with me today, and look forward to hearing you next week and having a great year. You're listening to the Main Street Code for Financial Success. My name is Neil Himmelstein. Best way to reach me is 631-647-4694. Have a safe, happy, and healthy holiday. If you don't hear me before Christmas and Hanukkah, thank you, and have a